All right, testing. Happy 9 p.m. on the East Coast, 9:30. It's almost bedtime, huh? People going to the office, it's almost bedtime for you. Thank you for the 3 likes. Everybody on the stream early today. Please tell me also if the balance between the background audio and my voice is okay. I have an auto ducking system for my mic. Hopefully it jumps in and out okay. I recently changed streaming profiles. I hadn't streamed so long, so I had to rebuild my setup from the ground up. But it's good because this stream really needed some upgrades, you know. The old GIF of that pixelated green animated flag wasn't really working. I like this a lot more, especially with the YouTube thumbnail face with my VTuber in the cache. Yeah, I do really like that. That's good. So we got a lot to talk about today. Don't know how long it'll take, but just getting back into the swing of things, that's what's important here. I actually checked, I haven't streamed since September. Been very busy. I kind of, how do I say this? I lost, I lost a little faith in YouTube. So what happened was when I was working on my program, CREATOR HEADSTART, about how to succeed and make money on YouTube, I worked on that thing around the clock in the middle of February. Let me just get my camera here. Okay, yeah, that's good. Anyway, I worked around the clock in February in dim lighting, and I actually strained my eyes so badly I went back to needing glasses. I've had LASIK surgery, right? But I worked so hard on that thing, I needed glasses again. So then I was thinking, yeah, should I even be doing YouTube? Is it good to be always sitting and staring at the screen? It's probably bad for my health. So I took a few months off, but now I'm back. Actually, I can show you. I need glasses again. Yeah, right here.
Hey guys, ready to be an accountant.
I haven't worn glasses in probably 7 years. So anyway, don't spend too much time working on the computer. Got a lot to do today. Also, gonna be together. Got a coffee, ice Americano. Nobody in the US drinks that though, unfortunately. Alright, let's kill the music here. Alright, so we got 3 things to cover today. First is... where is it? The interest rates were cut. Your stocks went massively up. Massively up. Are treasury bill holders and CD holders in trouble? Are they in trouble? That's number 1. Hey, Carbonomics. Oh, good to know. I was on all chat, or I was on top chat, so I couldn't see it. Didn't even know that was possible. Well, I didn't either, right? You think you get LASIK surgery, your vision's corrected, you're good to go. You can mistreat your eyes, and you can beat up your eyes so much that you can go back to needing glasses. Now, thankfully, I think my vision's only like a minus 0.25 or 0.5, but I worked so hard on making videos in that guide, it made me reconsider even wanting to work on the internet at all. I know like the laptop lifestyle, work from home in your office is really desirable, but you can push it too far. And that too far is working straight 13 hours a day, filming out the video lessons for your guide, and then killing your eyesight, you know? And the sad thing is, no money in the world is going to replace how great it was to have perfect vision before I did that. And as far as I can tell, there's no way to get it back. So that really sucks. So what I did is, I reconsidered my life path there. I actually started going back to school, and I started doing more in-person working, as in like commuting, going to the office, meeting people, not using the computer. Actually, I won't say what I am, but I became a sort of technical instructor. And I got some really cool clients, actually. Got people in the government, big companies, really nice. But that's still part-time, so I should still be doing some YouTube. I know I say this all the time, but I want to continue that VT documentation series. It won't be this stream, but I think in one of the next 2 ones I will start talking about my VT portfolio again. I finally got a share back. Actually, that leads into another topic we're going to cover today, which is the problems with FIRE. FIRE being financial independence, retire early. There are a few problems I found out through the years that I think people should be aware of and that aren't talked about a lot. Having tried to FIRE myself in my 20s and then giving up on it in my 30s here. We might talk about AVGO if we have time. That's Broadcom. And also, for you dividend lovers, dividends! Costco is paying a special dividend. $15 per share. Meaning, if you have a single share of Costco, you get $15 for nothing, right? Oh, apparently it's down 1.75% today. Huh, most of the market's up. Anyway, let's go on. Let's continue. Rates are down. So Federal Reserve held the rate steady, and then they're expecting 3 interest rates coming in 2024. As you can guess, as you can imagine, if we go into SPY for the S&P 500 ETF, the past 2 days, we have seen a 3% increase on nothing. This is right when the announcement came. It spiked up massively. But anyway, before we continue this topic, consider my website, CreatorHeadsTART.com, how to make money on YouTube and outsource the process along the way. I teach all the best, most current AI tactics for outsourcing and producing your videos as quickly as possible and for cheaply as possible. This guide is so great. I put so much effort into it. It literally cost me my eyesight. What better advertising point is that? That's number 1. Number 2, make sure you super chat. I read super chats at the end of the stream. Why do I need super chats? Why should you look at Creator Head Start? This is the reason why.
I need that money. I really do. I need that money.
Hopefully you can hear that.
I really need that money. Really need that money. Really, that money.
I need that money. I really do. I need that money. The next sound effect, I didn't get to add it this time before starting, but the next sound effect I need is that penny stock Mo guy saying, "Can we 10x these penny stocks? If we just throw in $100, will it turn into $1,000 or $10,000?" Listen, everybody, you don't put everything on. You don't bet the house on one penny stock. You just throw in $100. Like that. Anyway, interest rates. They are signaling a few cuts next year in 2024, which, as you know, the stock market prices in future news. So they're expecting in the future that stock prices will go up because it will be easier for them to borrow money. It's a return to the cash, the easy, low interest rate days of the 2010s. So anyway, let's look at this in perspective here. This is the federal funds effective rate, meaning the interest rate. And you can see here in historical context, the rate we're at right now actually is about normal. Typically, the Federal Reserve likes to hold interest rates in the 3 to 5% range. And you can see here going back to 2019, they tried approaching 2, but that failed because of obviously there's a little mini recession crash there and Corona. But back in 2006, they were holding steady at 5.25 during the height of it. So we're right back there. So you can see it's more or less normal. Don't expect massive cuts unless there's some sort of economic calamity. But usually they hold it in the 3 to 5% range, which is actually going to be better because as far as I can see right now, if you want to get a mortgage, rates are up to 7%. I hope you bought a house already. Everybody's priced out of the house market now. So let's talk about treasury bills and CDs. Those became very popular. I know, I got one myself. And you can see here that CDs and treasury bills, you lock up your money for a time, you get 5%, maybe 6%, and it's all whoop-de-doo, right? Because at that time, stocks were going down, you're getting your guaranteed 5%. Seems great, seems even better than dividends, right? Well, the problem is, eventually enough money is locked up in these things in treasury bills and CDs, the inflation rate goes down because so much money is being locked up and taken out of circulation, then there's no need to hold rates these high. And then when they're cut again, you lose out on the upside of holding stocks, or a broad ETF in this case. So it's not always perfect to just only be in CDs. You're sacrificing long-term capital appreciation. You get your yield, but that's about it. And oftentimes those assets are taxed. Now obviously stocks can be taxed too, but that's the downside you're paying with that. And so that was a very short-term thing. A lot of people were getting sour on dividends the last year, but now I think with these interest rates falling in, people might start flowing back into dividend stocks versus these CDs and yields, or these treasury bills. Usually with treasury bills, CDs actually, usually with those things, that's only for a short period of time. Usually you only hold those if you don't have anything to do with the cash now, but you know you'll need it in about a year or two. So for example, when you have a bunch of cash burning a hole in your pocket, you want to buy a house maybe in a year or two, and it doesn't make sense to put them in the stock market because the stock market could have a massive correction. Makes sense, right? So I got myself one CD. Let me get the calculator here. And my rate was 0.475. I got that a little bit early. And I see here you can get them up to 5.75, but in reality, probably 5.25. You can get those on your brokerage. So anyway, looking forward, good for stocks in the future. Maybe if you locked in your CDs at a long-term rate, like a 5 to 10 or 1 to 2 years, it's good now, but this might be the end of these interest rates. Okay, that's everything for that. Next up, this is really popular in the dividend community. Costco, $15 dividend per share. Special dividend. Apparently last year it was $10. Costco, if you own even one share, they'll pay you $15 in dividends. Let's see. Oh, but see, the thing is, one share is $630. That's like some people's half of their rent payment, right? And it's interesting. They have a little, they have a basic dividend 0.65% on top of that. But so I think what they do is they rely mostly on the special dividends. Yeah, here it is. There's one. December 1st, 2020, $10 special dividend. It looks like, was there... I don't think they did one for 2021 or 2022. So this is a return to form. Very interesting. Very, very interesting. Now, I'm not necessarily a dividend investor myself, but there are worse strategies out there. Really cool. All right. I think we covered just about everything I wanted to. Now, I have questions for the chat. Did you lock in a CD? Is that money out of reach now? Now you can't put it in the stock market to get that upside rate, that upside revenue. Do you have CDs? Actually, let's see. I can make a poll, I bet. How does that work? 5 viewers. Nice. Give me a second, guys. I need to figure out how to make a poll. Engage with your audience plus. Start Q&A. Start a poll. Oh, cool. I'll do both. Did you get a T-bill / CD when rates were high? Yes. No. Starting poll. All right, it's live. Next up, let's start the Q&A. Let's see how this works. Answer your viewer questions live. Ask me anything. And then during the meantime with that Q&A... Cool, we got both of them. Of course, it messed up my chat, though. Next, we'll talk about the problems with fire that I've encountered. This is... I haven't streamed so long they changed the interface. That's really interesting. Okay, so we got about 50-50 here. It says there are 2 votes on T-bills versus CDs, so it's half and half. So one person got a T-bill. Out yourself. Explain yourself to the stream. All right, let's talk about the problems with fire. Actually, 1 second here. I'll get Microsoft Paint up for this. So I can draw. Is it this? No, it's full screen share. There we go. Okay. So we're going to talk about the problems with fire. I mean, a thick one. Fire. Financial independence, retire early. Or in other words, if you get fired from your job, it's okay. You don't have to stress. You don't have to worry. So, we'll start with my experience with fire. Financial independence, retire early has been my goal pretty much since I was 16 years old. I had it put in my mind through a bunch of videos and movies that, what's the point of working an office job? You work 40 years just until you're old enough where you can't even enjoy your time off. Your body is so old and decrepit you can't even enjoy your retirement. That seems like a scam. I don't want that life. And so for most people that actually isn't attainable, but I got lucky. I started 8 YouTube channels. They got like 1.5 million subscribers. The rest is history. You can find out about that on CREATORHEADSTART.com. And so I saved up and I was able to fire early in my mid-20s. As in I had enough to save, had enough saved up, and enough to support myself. Now here's the few problems. Your 20s and 30s are your most productive years. If, for example, for some reason you fail in your fire, what if you fail? And you're 45, 50 years old? You've been out of the job market now for 10 plus years. Are you employable? Will you have to retrain? Is your brain plasticity up to the task of learning a new job all over again? The answer might be no. Another problem with this also is estimation. I did not take into account when I started and I first declared my FIRE only journey, I was not expecting to get married, have a family. Maybe I had a vague idea. I thought, oh, I have enough. I'm prepared for that. The thing is, you can estimate your daily expenses pretty well. If you have a finance kind of mind, you're on this channel, right? But you can't estimate it for what your wife is going to be like, your fiance or girlfriend or whatever. You don't know what their spending and saving habits are going to like. And at the end of the day, most of that is outside of your control. Most of that is outside of your control. So for me, my net worth took, or not net worth, or I should say like my savings, not net worth, savings, took massive blows from needing a house to fit my new family coming, right? A special investment I locked up most of my money in. You can't estimate things that will come down the line. Even if you're prepared with like literally $1 million plus net worth, that can go really fast. $1 million, especially thanks to inflation. Maybe it was a lot to me when I was in my mid-20s, but not anymore. That was not future-proof. It was not future-proof. So you want to cash in. You want to make hay while the sun shines when you're young and you have the energy to work hard. And I learned that lesson. I realized, wow, if making a guide ruined my vision from working that hard in the computer in my like late to early 30s, imagine when I'm 50 and I'm trying to work that hard in the computer. It's much better to work now while you're younger and still can, actually before your body gets decrepit. You only have so much time in the sun. You only have so much time to make money while you still can. So that's another problem with FIRE. You can fail, you can misestimate how much you need in the future, and you are not making yourself future-proof. And the sad thing is, what turned me on to this was somebody in my Telegram channel. They said, FIRE in your 20s is stupid. These are the best years of your life when you can make the most money. And I realized nobody had mentioned that before. No one had ever said anything about that before, about retiring early and saving up. Now, don't get me wrong. There's nothing bad about saving. You should save. But I caution against retiring early because maybe you have enough to support yourself. I thought I did because I was dumb and I was buying preferred stocks. Do you guys know what preferred stocks are? They're stocks where they act like bonds. They just have a high dividend, but they don't really appreciate much. Usually they have like a floor price, which is the redeemable value of it. So I thought those are like bonds. Those are like high yields. So I got those, and I missed out on the amazing stock market of the 2010s because I was in these preferred stocks, which don't have much upside potential. But anyway, I estimated I had enough for myself, which I did. I had enough for myself living at home with my parents to support myself indefinitely, or being in a small apartment indefinitely. What I did not have, which you'll find if you try to FIRE in your 20s like I did not have enough for a house, plus wife and kids on top of that, plus the lifestyle I'd become accustomed to. Those were the three problems. And the crazy thing is my lifestyle wasn't that crazy either. It's not like I got a sports car or anything, but when you have the Corona economy and inflation, it's hard to keep up. You know, despite what people say, pretty much all assets are not inflation proof. But you know what is inflation proof? Your skills. Your skills cannot be inflated away. You can try to structure your money any way you like, but it'll never hold up as well in an inflationary environment as opposed to your skills. And that's something I learned. If I had gone to school during this time when I was taking it easy, FIRE, traveling the world, I'd be in a better position than I am now. So those are the problems about FIRE. Let me know what you think. Do you want... Let's end this Q&A. We'll do the other Q&A. Start a Q&A. End Q&A. Let's ask you about FIRE. Am I crazy? Am I wrong? Start Q&A. Do you like FIRE? Start Q&A. Chat, come back. I see one post about that. I'll refresh. Let's see, this might be it right here. Pin message. I wish there was some way to feature a comment here. So I see one from Carbonomics. I'll just pin it. That's how I'll do it. Working on a business full-time instead of a 9-to-5 is one thing, but straight up retiring doesn't seem like a good idea. Yeah, so in this case, you're more the let's see here, the fee part. Go to black. Fee rather than fire. I agree. I guess the main point of what I'm saying here is I'm trying to discourage the part of fire, the retire early part. Don't do what I did. Don't try to retire in your 20s. That was a serious mistake. Don't do that. That was a bad idea. No matter how smart you are, you can't predict the future. But one thing you can take with you, stocks rise and fall, but one thing you can take with you always is your skills. Skills. As Warren Buffett, oh, actually my head's blocking it, huh? Let me see if I can fix that. There we go. My big head's blocking that. As Warren Buffett says, the best investment you can make is an investment in yourself. The best investment you can make is an investment in yourself. Oh, that's interesting. Oh, there we go. I fixed it on my phone. It was blocked to my phone. I couldn't see the chat. So best investment you can make is an investment in yourself, not your stocks. And I learned this lesson because, let's make a circle here. I imagined when I fired, I thought I was an investing genius. So I thought, okay, eventually with enough saving and yields and dividends, let me make this thicker. I'm probably going to be like this. 20% from my working passive income and 80% from my stocks and dividends. My passive investing income. But the reality, having done an audit of my performance over the last 5 years ago, the reality was more like this. I was neglecting what I was good at for the glamour and excitement and narrative of investing. So, the reality is more like this. It was more like, make that a bit bigger. 30% of my net worth came from investing, the opposite. And 70% came from that I was good at YouTube. That's how it actually turned out. So the projection was completely mismatched to the reality. And so scaling down, slowing down on working, neglecting these skills, or retraining, because as everyone knows, YouTube doesn't last forever. Neglecting those skills means the 70% pie is in danger. And once again, my big head's blocking it. Let's see. Maybe I can do this. There we go, that's better. I firmly believe unless you're like a hedge fund manager, you're never gonna have a pie like this. Unless like you're super retired after a long, successful career. But at that point, that's because you scaled down your career, right? Not anything else. So those are the problems I've encountered with FIRE, which is why I have returned. I have returned to the workforce at the fresh age of 31. Hello, Matt Money. Congratulations on the success. When Lambo. I remember one time I tweeted you. Nice to see you in here, man. Replace pin message. I remember one time I tweeted you, and that's what you said to me also, when Lambo. When Lambo. How much is a Lambo? I bet I could afford one. Let's see. How much does a Lamborghini actually cost? Okay. Probably more than you think. I'm ready for this. I literally don't even own a car, which is the crazy thing. You could afford a Lambo, you rich. Well, we'll see. We haven't read the article yet. But I live in a place with good public transportation, so I don't even have a car. I take the bus and the subway. Okay, Lamborghini LP. I don't know anything about these nice cars. Hurricane, I can't even say the name. Wow, so $219,000. That's not bad at all. There are houses that are more expensive than that. Yeah, I could do that no problem and keep my house. 240, that's okay. 272. 290, I wouldn't go much beyond that. Interesting. These actually, to be honest, the They look kind of tacky. At least that's how I feel about it. But let's see, what's the maximum, like, where I could still theoretically afford to live? Let's say, like, small apartment and be, like, car poor. How high could I go on this? Yeah, these are only in the 200K range. If you finance this isn't that bad. Oh, so 1.6. Okay, I can't afford the Aventador. I don't even know how you say that. Can't afford this one, but all the other ones I could. Interesting. But the thing is, I probably could have afforded these, like, when my first YouTube channel took off. I could have literally been like the kid living with your parents who get like a Lambo parked in the front yard. That's funny. Yeah, I think a lot of you guys could afford this. It's not really not that much. Most of you guys have like taxable accounts that are about this size. Like if any of you have a decent enough office job, you could afford one of these no problem. Now, would you? This is the classic calculation. Why would you get, let's see here. Let's do like a 278 one. Why would you get a $278,000 Lamborghini, not including like obviously the maintenance expenses, right? When you're, you know, on a conservative side, you're giving up on, let's say 5% of growth a year. Yeah, you're giving up 13K of growth, almost 14K of growth a year for one of these tacky things. I'll never get it. I'm curious why you didn't focus on YouTube more instead of going to work 9 to 5, not enjoying the screens. Yeah, like I said, I was really traumatized from my experience making my How to Succeed on YouTube guide. CreatorHeadsTart.com. Buy it.
I need that money. I really, really do. I need that money.
I was traumatized by that from wrecking my vision so much that I thought I had to completely career and pivot change. But actually, no, I realized what I can do is I can just not spend as much time on the computer. So a great way to get around that is don't do any of those marathon working sessions anymore. And don't play games, which helps limit screen time too. Yeah, that's the reason. I like the past 3 months, I transitioned into a field that is completely in person. Like I said, it's like a mix between corporate training and consulting. I go in, they're VVIP clients. We sit in a conference room. We talk, there's no computer, it doesn't wreck my eyesight. I got really scarred and scared by that. I think I mentioned it on the Creator Head Start Discord as well. Which is funny because I'm actually trying to get into accounting now, which is a heavy screen job, but we'll see how that goes. That's what I'm trying to do. Just got to figure out some work-life balance, but I think even accounting screen-wise is going to be better than YouTube. When you're a YouTuber full-time, you know, the buck stops at you. You have to take care of everything. And not only did I make content, but also I watch a ton of YouTube. Is that you have to, you know, you have to keep abreast of all the trends and strategies and everything, and it was just way too many screen time, or too much screen time. So like I said, I took a 3 to 4 month break. In fact, maybe most of the summer too, now that I think about it. So let's say a 6 month break. And actually it's helped my eyes a little bit, they've healed, but yeah, I went to the eye doctor, and even with the LASIK they said, you did this to yourself, don't work so hard in these, you know, dimly lit rooms, don't look at screens so much. And no matter what I do, that vision's never going to come back. It's very sad. Alright, so pin. Now, one thing getting to your message there, Carbonomics, is, you know, this is 2023. 9 to 5 jobs also have a ton of screen time too. So it's something I desperately want to avoid, but the problem is, for being an instructor, the pay is just not what it's supposed to be. Not at all. It's not even close to where it needs to be. Again, I'm used to the lifestyle pulling in 20 and 30K a month. I don't like the pay cut. I just don't. So it's a personal choice deciding between your health and your income. Yeah, but I can't cope with the pay cut anymore. I just don't like it. So I'm back here. But definitely, I've done YouTube now for, it's been, so I started seriously 2014, so I'm coming up on 10 years. One thing I am a little bit tired of is not having coworkers. It's definitely hurt my network a lot, as in people I know, being a sole YouTuber for 10 years. And that's because the people I work with were mostly like young 20s guys who did my editing or maybe my voiceovers. And that's not really, you know, I love those guys and they work with me on projects, but at the end of the day, for like transitioning into a business, or as Carbonomics is saying, a 9 to 5, those connections aren't really helpful, you know? Like imagine, like, let's put it this way. None of those guys converted into a LinkedIn connection if I had LinkedIn. That'd be a good example. So anyway, back to the question, why didn't you focus more on YouTube? I've done YouTube for 10 years. I could not focus more on it if I could try. It would be impossible for me to focus more on YouTube. I literally, like I said, I worked around the clock for months on end making the guide. I was still running on my channel, still uploading videos. I could not, I think my problem was I focused too much on YouTube, not a question of focusing more on YouTube. Another good example, though, is of the changes I've made, the good changes. I've stepped back from the other channels in my portfolio. I've really wound them down. The few things I can outsource, they are 100% outsourced. I'm considering selling a few. And so what I can do then is, because obviously I've had my full 10-year career, I can still do YouTube, but it's less screen time, and also I can focus more on this channel, which is the one I actually... This one is probably one of the few ones I actually legitimately really like, even though it's probably the lowest and the worst in terms of views and engagement, because I'm not chasing the highly popular investment strategies like dividends, penny stocks, individual stocks. But in the long run, if you do the right thing, you talk about the right thing, there will be an audience for you as long as you're engaging and the truth is on your side, right? Let's see, I think we covered, let me go back to fire here. I think we covered everything I wanted to with fire. But anyway, be careful, guys. Don't work in dimly lit rooms. Keep the screen at a good distance. Don't focus too much on small things. Limit your screen time. You can wreck your vision. You probably will be immune in your 20s. But when you get to your late 20s, be careful. You can wreck your vision. Now, I think you have to really try to do that because, again, I play a ton of games, full-time YouTuber. I love watching YouTube videos. Like, again, it was screen. And for months and months on end, especially during the Corona years. And so you have to really try to wreck your vision like I did, but it is possible. So be careful. It's not likely to happen to you. You have to be like me, where it's like this perfect storm of sedentary lifestyle, way too much free time, no responsibilities, and a love of screens. All of those, and also me peaking in age, right? All those things converging together is what caused that. But anyway, take care of yourself. The best investment you can make is an investment in yourself. All right, so that's the we talked about rates, talked about CDs. No one really volunteered information. They don't want to talk about it. I talked about my CDs, how this might be an end of an era for CD holders and treasury bill holders. We talked about Costco's special dividend. Talked about the problems with fire. And so now, let's look at garbage stocks. 1 second. I'm going to change the stream title. Tell me your garbage stocks. And I'll do a review of them. All right, title is changed. Oh, interesting. I think I moved my stuff. Yeah, it looks like I messed up the canvas here on my OBS. Yeah, I'll have to fix it off stream. That's a shame. Full screen share. No, that's not what I wanted. Okay, now we're back. All right. Type in your garbage stocks in the chat and I'll do a live review. What stocks are you into right now? One thing that was interesting, this is going to be a members only video. Broadcom, I talked about this on the Telegram, up 1.5% today. Broadcom has had an amazing year. One more tab for stockanalysis.com. 95% up on the year. I've had this one for years, or had it. I had to sell everything. And compare that to the S&P 500. 1 year time span. 19%. I'm sorry, year to date, not 1 year. 22%. This thing is an amazing blue chip. Should you be buying individual blue chip stocks versus ETFs? No, maybe not. But you're going to anyway, so might as well talk about it. Anyway, type your tickers in the chat. We'll do some rudimentary financial analysis here. So, I actually have my notes here. Maybe can I show this on screen? Yeah, right here. Nice, it keys out. I have my notes here for... Interesting. I think this chat's not populating. I can't see all the messages. Switch back to all messages. Okay, I have my notes here for how to analyze stocks. So you always want to check capital expenditures. Let's see if I can find that. It's probably under cash flow if I had to guess. Cash flow. I think it would be operating. I can't find it right here. But anyways, you always want to check capital expenditures. If they are slowing down in a company, that means it's giving up. It can mean they're giving up, they're winding down operations, they don't know what to do with their money. Second, acquisitions. That's one thing that's important to look at too. Is the company making too much acquisitions, or are they not doing any, which means they're really not trying to expand? Similar to that. You should go through some more stock mode 10x picks. I saw he had a video about that recently. Maybe that's a good idea if nobody types a ticker in the chat. Thanks, Carbonomics. Stock mode 10x stock picks. That's more of the stuff you're into. That's more of the stuff you're into these days. My goal for you is to get you out of being in penny stock mode. I think it's your age more than anything. You'll get there eventually if you don't like set up a successful grift where like you just talk about penny stocks and make a ton of ad revenue. There's two futures for you. Either you become a sane investor or you become so successful in penny stock land, you'll just farm that forever. All right, so shareholders' equity. If it is negative, that means they have more debt than assets, which is a really bad sign. That means that the company is underwater. You're literally buying something that's underwater. You're buying a debt obligation when you buy it. Gross margin gives you an idea, is the basic product or service they're running even profitable in the first place before anything? Let's see here. This doesn't include interest, taxes, and administrative costs. But even if it costs nothing to run a business, if the gross margin is negative, that means the business is a failure for now. It could change later, but for now it's a failure. Operating cash flow, that's all cashes that run to the business. Oh yeah, what did I write here? Follow Stockmo. And that Keenan Grace guy, and just do before you buy all their trash picks. I don't know why I wrote that. That's funny. But yeah, we can watch Stockmo. Because nobody's got their tickers. I guess everybody's they're hiding their gold pot of amazing stock picks. Stockmo. 600,000 subscribers. How is he doing per video? 7,000, 16,000, 15,000. This channel's dead. Dead like mine. I know, it takes one to know one. Alright, so all these thumbnails look exactly the same. I love the AI Warren Buffett rage. That's a funny thumbnail. Interesting, though. As I get older, I will slowly transition to blue chips like a good boy. I got out of mining, so that'd be a big win for now. You did get out of mining, I saw that, but you still got a ways to go. It can get better. I would still, again, watch some of the Strongman Personal Finance videos on being a blue chip investor. Again, that's like a faux ETF. At that point, when you're picking individual stocks, you're just recreating a index ETF, but with more concentration and more time wasted on managing it. But anyway, when everybody's young, they don't appreciate their time, which is funny. They don't appreciate their time. All right, so we're not going to talk about short squeezes. That's boring. Reddit stuff. Top stock price gains 200%. Best stocks to buy now. This is like an Amazon product listing. This is like an AI wrote this. What is this title? It's giving me a speech impediment reading it. Okay, rocket emoji, top stock price, stock gains, 200%, rocket emoji, best stocks to buy now, top penny stock, 2023, growth stocks, 2023, rocket emoji. My guy, this is not SEO Amazon blog spam. What are you doing? Of course, oh, so he hasn't, he needs to get with the program on how to do YouTube. I'm noticing he's aiming all of his videos for the 10-minute time frame. Listen, videos used to be, you needed 10 minutes to have the maximum ad rates, but that's not the case anymore. You don't have to make videos 10 minutes for the sake of making them 10 minutes anymore. That's not how YouTube works. It hasn't worked that way in probably, it's been 5 years since they've had that rule. I guess he's not keeping up with the times. Stockmo, if you need help, join CreatorHeadStart.com. I give live support up to the date on the Discord. I'm with you in the backseat as you build your YouTube channel.
I need that money. I really, really do. I need that money.
Yeah, I would just buy an index. I've seen Strongman. He's quite a character. Yeah, but he's also right. He's also right. Anyway, so this is a nice SEO blog spam. Title there, Stockmo, and also, you don't need to make videos 10 minutes. All right, let's start.
One of the craziest days out there. We absolutely slaughtered it out there on the markets today. And look, in the video, the live stream today, we had not one, but 200% up trades. SoFi is running. TMF family put it in there. We are making.
All right, SoFi. So apparently SoFi is popular in penny stock land. I've heard this before, but I'm not too familiar with it. Financial services, what kind? Oh, so this is like microloans. Got it. So it's one of these like little app microloan things. Okay, so let's see. Year to date, 100%. Okay, so that's good as Broadcom. Let's see in bigger context here. Oh, another negative 45-degree knife chart. Every single time. Now, this isn't actually really a penny stock because it's a $9 billion market cap. Like, this is too quality for Stockmo standards. 1 second, guys. Okay, I'm back. Let's see, full screen share. Yeah, I'm seeing my views just tripled when I'm talking about Stockmo. You guys know what you want. All right, so okay, so revenue's actually going pretty well, but obviously it's a new company startup. Interesting. Cost of revenue is not that bad actually. They are profitable on a gross level. Operating income is negative, so we're going to have to figure out like what they're blowing their money on. See the gross margin. Good gross margins. Operating profits pretty bad though. So basic product works. They probably just don't know how to run their company. So if I had to guess, just looking at this immediately right here, they either it's like suffering from the fact that it's a new startup, or we have executives just looting the company, like always. So far, this doesn't look terrible considering it's new. All right, so let's see what they're blowing their money on. So research and development. Okay. Other operating expenses really blew up there. Selling, general, and admin. Okay, so this company, by the looks of it, they're using this to enrich insiders. They're spending $1.2 billion on selling, general, and admin expenses. $1.2 billion. Their basic revenue last year was $1.5 billion, and it's 1.9 now. So let's see. It's the same problem every single time. Same problem. 1964. Yeah, so 61% of their gross revenue is spent on this stuff. And when a company is spending this much on selling, general, and admin, this is not something that's as easy to fix. It would be one thing if, for example, it was cost of revenue. Like, potentially that can be cut down. Like, research and development, that can be cut down. Obviously, a big running cost of research and development makes sense when it's a new company, but selling, general, and admin is something you rarely see get cut down. And if anything, this thing's blowing up. It's bloating as more people are getting into the stock and it's getting more popular. So sometimes it's fine if a company is spending a lot of money, but it depends on what. And usually when it's something like in selling, general, admin, that just indicates that there's bloat coming and the bloat's going to be there forever. And of course, this is a massively diluting company, so they're diluting anywhere from 87 to 70% to 600% a year. So we figured out why this is a negative 45-degree knife chart. And I bet people were talking about this all the time in the 2020, 2022 range. I bet you anything if I looked on YouTube, all the YouTubers were talking about this. They bought in here. And now they're celebrating, like, look, guys, it's up 100% on the year. Ignoring that, like, I guarantee most people bought here. And they're still done massively negative 80, 90%. And they're celebrating this little rally here at the bottom. Now, let's see what they're blowing their money on. Negative income, net income to start. Operating cash flow is massive. Massive, massive, massive. So they're selling acquisitions. That's a great sign. That means they're offloading their companies, which means scaling down. Capital expenditures are massively negative. Change in investments. Let's see, invest in cash flow. Other financing activities. That's how they're paying for the company. This is probably shareholders dilution. Yeah, so it looks like, again, they're paying this for this company with shareholders dilution and debt, and they're selling off acquisitions. And yeah, I mean, it's funny because on the operating cash flows, I'd have to look at the actual SEC filings, but you don't even see most of the bleed here. Most of the bleed is right here, selling, general, and admin, which means that you have a bloated company. I bet if I went to their website, they'd have way too many executives. That's probably the get. Oh, I can already tell here. Look at this. Again, this is like when I compared, what was it, that other EV company to Tesla. Maybe it was like Rivian or NIO to Tesla. Okay, a $9 billion company does not need 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 10 executives just on the first page right there. And I guarantee there's more. Like if I actually go to their website. Usually it's linked here though. SoFi.com. Yeah, let's look at their executive team here. I am a human. About our leadership, let's say. Oh my goodness, look at these executives. Oh man. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. 12 just on the first page right there. That's unbelievable. I know small private companies like in the $100 million to $900 million range that have a fraction of this. There's no need to have this many people. I know multi-billion-dollar like companies that are on the stock market. We looked at Tesla. Tesla has fewer mainline executives than SoFi does. And Tesla is another one of these bloated spend like it's crazy companies. Unbelievable. So what do these people even do? So CEO, Chief People Officer, okay. Business Unit Leader, okay. Executive Vice President, another business unit leader for Spend, Invest, Protect, and Save for the bank. All right, so there's a CFO. General counsel. He looks like a general counsel. Every general counsel always looks like this. That's funny. CTO makes sense. Corporate development, strategic partnerships. Marketing officers. Global head of operations. Business unit leader, member. And another CEO for a subsidiary right there. Okay. Yeah, there are definitely cuts you can make here. It looks like, for example, their business unit leader is like way too stacked with mainline and executives there. I'd have to look also deeper too if there's anything like they're killing themselves on stock-based compensation. Interesting though. All right, Stockmo, let's see.
Bank. I was able to go ahead
making bank.
People, and I'm going to show you guys right now how much money is being made in this market. And I don't usually.
Well, we've talked about the statistics on this. Money is being made in this market. It's just not being made by penny stock people. Oh, what was that SEC paper I had on it? I think it was in one of my previous videos. Hang on. I want to show... It's a little sad. I made this really funny, interesting video. You have this tier list for investing strategies. But it didn't do so well. Only 143 views. I think my friend said I was talking too fast like Ben Shapiro. Little sad. This was a great video, though. It's really funny. Anyway, for penny stocks. In a study from 2016, a sample of over 10,000 OTC stocks from 2001 to 2010 found an average and median annual returns of -27 and -37% respectively. And here's the distribution of OTC holding period returns at the investor level, meaning an individual investor. So the vast majority of people, for the time they hold penny stocks, they're raking in anywhere from -40 to -10% right there. And the winning percentage is much smaller. And also, I think it's statistically proved that the only people who win in penny stocks are the promoters or people who talk about them in the first place. Anyway, I highly recommend you watch this video, the latest one on my channel, Investing Strategy Tier List, YouTube Thumbnails Edition, and focus on the section about penny stocks. You'll learn a lot about how garbage they are on there. So anyway, Stockmo, no. The math is there. People don't make money on penny stocks in the aggregate, statistically speaking, from the data I've looked at, not financial advice.
Do this, but I do want to show this out there, and this is crazy. Remember, I am just a teacher, and so for me to have this this opportunity is crazy. Take a look at this, folks. This is absolutely...
Whoa, bro. Do you see his cell phone? His cell phone is the, this is mine right here. His cell phone is the basic, I think it's like Samsung A34. Like, that's the budget economy model. Why isn't Stockmo, like, running the iPhone 15 or Samsung whatever Ultra Note Flip? Why is he running a cheapo phone? Is it hurting in penny stock land? Unbelievable. That's hilarious. Yeah, why is he running an economy budget phone? The reason I have this is my second phone. It's my backup. Anyway, okay, this doesn't prove anything. This is a screenshot that he pinched and zoomed in. I can make one of those in 10 seconds in Microsoft Paint. I could erase all my fire talking and then make one of these.
Absolutely insane. That, my...
Okay, whoa. Even assuming this screenshot is real, look at this. Look at this. Even assuming this screenshot is real, the daily change up 51%. You see this spike? This looks like a deposit. Okay, stock appreciation, unless it opens pre-market really high, your stock account going up like this does not look like this. I know this because I posted the chart for my TD Ameritrade, my TD Ameritrade account on my channel. It goes up like this. It does not look like that. He just deposited a ton of money. That's what it looks like to me.
Insane. That, my friends, remember, I'm a teacher. That's my salary. My last salary as an educator was $63,000 a year, and that's my retirement
That was a good job. $63,000 a year, like 5 or 10 years ago. You had a good job.
account. No, I don't have access to it. Can't touch it. Can't touch it until I'm, what, 59 and a half at the earliest. Most likely 62. So all that money there, I can't even get to. So it's in my retirement. That's what was made.
Penny stocks in your retirement account. Amazing. Anyway, when are we going to get to the stock gains, best stocks to buy now, top penny stocks 2023?
Today. It's unbelievable. TMF was a big part of it. I loaded up into that. I do have it in account.
TMF? Is that what he said? Did you hear that? TMF? The problem talking about penny stocks is usually too much of them are trash and they don't even show up on stockanalysis.com. TMF? Treasury bills? 3x shares? What? What kind of lunatic ETF is this? Did he talk about 20-year Treasury Bull 3x shares? I hope not.
I said I can control. Money is being made hand over fist. This is unbelievable.
You know money is being made hand over fist because I have a pinched in screenshot on my phone. Hang on. Stock gain picture. This will be funny. Oh man, it's all stock photo garbage. Schwab. I like the ticker scrolling by like we're on the stock trading floor. The thing is, it hasn't even acted like that in years. That's funny. I'll go to Chrome. Still taking stock suggestions. CRGY. Yeah, I can do that. Stock gain screenshot. Schwab. Look, guys, I'm going to be an amazing stock picking expert as soon as I find this. Yeah, I got it. Okay, guys. Let me pinch in. Look, guys, I made... Oh, man, it filters out. I can't... Look, guys, I made 400%. Look at my... Look. I made 400% of my stocks. I'm a genius. We are making money hand over fist.
Unbelievable stuff. Big time stuff. So if you haven't joined, a couple of things. One, it was the bread recipe over and over today. It kept making us money. If you haven't joined the course down below, you need to...
Oh, he has a course.
It's there. Put in code mode before I put... It's been
Skip.
wild. So let's dig into it. Let's talk about
1 minute 55. He's getting better since last time. Last time it took him 3 minutes.
what's happening out there. Take a look at the markets for where we are. I got a lot of good information.
Oh, he was in the... Oh, you'll have to talk about this. Wait, whoa, he's really changed. Okay. So he's switched from like penny stocks to small cap. I see here Tesla and NEO, but also Vanguard bonds and T-bills. T-bills. He's changed up his game. That's interesting.
Fed is done. They're done raising rates. I don't care what they say, what they try to season, just because we had a few down days here. Why? Why would you sell over to 60? We did.
Okay, so he's doing weird stuff with treasury bills, which... What are you doing? Yeah, so I guess he's trying to time the market. If I had to guess, he talked about it. I have to look at his channel. He probably talked about it after it had already gone up a lot, but this is not something you want to be holding a long time, in my opinion, based on looking at this chart. Again, you have a 1 year negative 34% knife chart, S&P 500 19%. It's not worth wasting your time. Dividend yield is only 0.27%. You're not even getting like the yield if you care about that thing in an actual T-bill. Like, this thing is just a massive depreciator. Yeah, look at this, negative 3% or negative 63% over the last 5 years. Like, you had, like, there's something about, like, these penny stock channels have an incredible ability to find negative 45-degree knife charts that I never would have ever thought about or considered in, my situation. Like even when interest rates were going up, my reaction to it was, okay, well, I've got cash sitting around. I'll look at some rather than focusing so much on stocks, maybe I'll lock in some CDs, right, for cash I need in a year or two. That's a normal person's reaction. Your reaction is not to find the Direxion Daily 20+ year Treasury Bull 3x shares. Man, the borrowing cost has to be insane on this. 3x daily exposure. Every single 3x ETF ever is a massive depreciator. Every single time, whether it's 3x inverse the S&P 500, only short term. Only short term. And at that point, if you're, trading short term, you're a guaranteed statistical loser. You're not going to make money. Anyway, overall, over time. Maybe you'll get lucky a few times and it'll be exciting, but in the long run, those people tend to lose. All right, so Crescent Energy Corporation, our company. This was GKO 90. Small market cap, $2 billion. You are a dividend boy. I see a dividend 4% right there. You seem to be a dividend kind of guy. Crude oil, natural gas, probably, Permian, so Midwest US, those tend to do well when foreign energies politically in trouble, but then other times they get wrecked because other countries can produce oil more cheaply and even import it here. 1 year -3%, so underperformed the S&P 500. 5 years -45-degree knife chart, -20. Pretty new company, only came out 2022, so not a ton of track record here. Let's look at the financials. Yeah, so the price is really inconsistent in line with the price of oil itself. They had a pretty nasty 2020, but pretty much every energy company did at the time. They've done pretty well since then. They are profitable. Selling. This is another example. Look at the selling, general, and admin. So again, it's 131 over $2.4 billion in revenue. You don't need to run your company like this. You don't need a ton of selling, general, and admin. And I guarantee running oil, oil, natural gas is way more complicated than your stupid little app that moves around numbers on a screen and loans to people. Tesla Y is one of those dividend investors are really falling for recently. I've seen that. I don't have time to cover it in this stream today, but I've definitely seen that. Anyway, if you're enjoying the stream, once again, check out CreatorHeadStart.com, my guide to succeeding in making money on YouTube, doing it without necessarily showing your face, outsourcing the process, and using AI tools to get an advantage. Buy that.
I need that money. I really do. I need that money.
And super chat if you got it, if you're enjoying the entertainment tonight. All right, so, and also they have positive operating income. That's good. Not in 2020, but I'll give them a hall pass on that one. So in this case, what you'd want to do is you'd probably want to look at their debt situation. That's the only thing I'm concerned about. They massively diluted 2021, but that makes sense. Other than that, they've been okay on dilution. Gross margin's good. Operating margin's good. Profit margin's kind of eh. They're probably better oil and gas companies out there. I'll try to think of a few examples for you. All right, so let's look at their cash flows here. Where are they spending their money? Capital expenditures are increasing, so that's a good sign. They're making acquisitions, so they're trying at least. Okay. Issuing a lot of shares. Yeah, it's not an amazing. You saw this on Reddit, if I had to guess, GKO 90. So it's had an interesting, past few days, but honestly, again, you're talking to me. I would just get an ETF and not spend all my time looking into this stuff. For alternatives, you might want to consider is Chesapeake Energy. How do you spell that? There's CHK, $9 billion market cap. They do more or less the same thing. There's obviously midstream and upstream, right? At least they're more positive on the time frame than this max one. See, this is a better chart for sure. You'll have to sacrifice 1% on the dividend. I hope that's okay. This is a better example, looking at their financials here. Yeah, growing revenue, gross profit. Let's see their margins. They got way better. So they look at the profit margin, 49%, operating 42%, gross 60%. This is a better example. And by the way, there are ones even better than Chesapeake. So just look at, at the end of the day, none of these oil companies have a really special, spectacular story. Look at some of their competition. Like, that's kind of a mediocre money-losing company by the looks of it. So, yeah, they're better. It looks like there are better ways to spend your time. This is just kind of meh. Buy an ETF, seriously. If you're at the point where you're looking into and asking on live streams about $2 billion energy or natural gas and crude oil companies, consider an ETF. 1 second. All right, do we have any other tickers? Any other tickers? How long have I been live for? That's another question. Any other tickers? This was just a practice run before I, to get back in the swing of things. If not, we'll go back to Stockmo. I don't have the bandwidth to talk about TSLY today. That's for another time. I hope he's not just talking about these like garbage 3x inverse ETFs. That's boring by Stockmo standards.
Water over the last month, 31.96. Told you it would get over to 60. We did. And now, at this point, you can do what you want. I don't blame people. TMS, you know, he had a good run. It's not going to be all straight up biggest.
Wow, I never thought I would see the day where Stockmo would talk about SPY. What is happening to this world? He's talking about the S&P 500 ETF. Am I in the right universe? I leave for 3 months and this happens? What is going on?
Pepper I've ever seen. I got to tell you, this is crazy. And yeah.
Am I on the right channel? Is this like an AI?
Yeah, we are on the right side of this, Pepper.
Though, really, honestly, if you ever find yourself looking at a candlestick chart, reassess. Reassess your life. If you ever in your like 20s and 30s find yourself looking at a candlestick chart and you're not sitting on a trading floor of a bank or one of these like finance firms, if you are ever looking at a candlestick chart, go to your mom, go to your dad, have them slap you in the face and stop it. Stop it.
It was at 2 right here. We bought the calls because I wanted to be in calls.
Oh, of course it's options. Okay, I gave him way too much credit. I thought, oh, wow, good for him. He's talking about the S&P 500. It's like, oh, I'm in calls. Of course he's doing options.
We actually had put options all day. I switched right before 2 o'clock as I said it was most likely. Right in here, I said it was going to...
Wow, that's amazing. Isn't it? Every single YouTuber, they always perfectly predict these swings. They always tell you after the fact, too, never before, right?
Run big time up because it was
coming big time up.
Going to be dovish, and they were. And so it came out, and we bought in here, I believe it was. It went down a little.
I was right at the perfect time. I switched. So, like, let's break that down for a second, Carbonomics. So first he was doing puts. He was doing puts for 2 hours and then he switched. What kind of investing discipline is that? Where you're wrong for 2 hours, then at the last second supposedly you switch? Based on what? He has no methodology. He has no process. It's, I was dovish, or I was bullish and then I was dovish, and I flipped a coin rate on the Federal Reserve news. This is not investing. This is not sustainable in the long term. You cannot flip a coin at every Fed meeting and spend all your time doing this and get ahead in life. Again, like, buy lottery tickets, go to the casino. At least people will bring you drinks. This is ridiculous. Rather than hanging out with this guy on YouTube, hang out with me instead. You're in a bad spot if you're coin flipping Fed meetings. Look at candlestick charts and hang out with Stockmo on YouTube. Go to the casino. At least like the the service people will pretend to be excited and have a good time with you. I switched right at the perfect time. I could do this too. It's not that hard. Let's see. S&P 500. Let's go to 5 days. Let's see. All right, guys. So first, I was really negative on the S&P 500. I was convinced that China was going to attack Taiwan. But then 30 seconds before, I knew that there was a headline coming about the Federal Reserve, and I knew it would be dovish. So actually, I bought massively, and I made a ton of money. We made money hand over fist. I switched at the right time. There you go. I'm an investing YouTuber.
And then, pew, off.
Pew!
And that move made us bank.
Maybe bank.
A lot of money.
A lot of money.
Wrote it up. I tried around 2:30. I was playing the put options.
He's back at it. So, you know what I think? I think he was focused on put options the whole time, and he keeps trying to force it. He's looking at these random noise of candlestick charts. I was trying to... I was doing put options into the most positive economic news in the last year. Yeah, great job, Stockmo. Even if you are an options loser, that is ridiculous. Don't do that. Even by option strategy standards, that's not. Ugh, what are you doing?
Got out, took all my profit, bought put options at 231. It worked, but I didn't get out. It rode up. I got out here, switched back to call option.
Put call.
And of course, you can see what happened at that point. And I closed out right in here is where I closed out. And so
wait, so he switched, he closed, and then got back in, then closed at another random time. I guess what he's doing, he's literally just following this chart and picking the peaks and saying, okay, that's where I closed. And then I got back in right after, and then up more, that's where I closed. Again, I can follow these charts. I could do the same thing.
it was a good day. There's no complaints. The markets are still doing its thing. A lot of things happening out there. Information coming out over the last day, including today. Look at this, producer price index. All these numbers were good for...
I wish I could stop him right there and say, can you tell me what the producer price index is? Can you tell me? Do you know? Have you heard of that term before making this video? Pop quiz, what is the producer price index? If you don't even know, don't trade options on it.
The Fed, and they allowed them to do what they need to do. 0.9%. That means the inflation for the producers is only 0.9% year over year. That's under 2%. The Fed wants it at 2% or higher. GDP. They thought it.
Okay, he's trying to be like one of these like Meet Kevin, follow the Fed on everything news, which is, you know, boring and a total waste of your time. Though it is funny though, our economy has changed a lot, where pretty much the stock market is entirely at the mercy of what the Fed does. So we've kind of transitioned to that like third world, like it's not like the country I grew up in, where it's about economic data, not like what's the Fed going to do to stimulate the stock market. So pretty much it's like a state run. The stock market is state run between the Federal Reserve and BlackRock and Vanguard controlling all the shares and voting. It's not what it used to be. Anyway, that's boring. Give me penny stocks. I don't like this direction he's doing in content. Like I'm losing my sources of entertainment here. I might have to focus on Keenan Grace instead. $500 million in dividends a year. Whoa. Matt Money, it's over for you. $500 million in dividends a year. 2 check marks, period. Best dividend stocks to buy. So this guy, he does penny stocks, bonds, 3x inverse treasury bill ETFs, and then trades options and puts on the PPI numbers. This is schizophrenia. Schizophrenia incarnate. What is going on this channel? He pivots and changes his strategy more than I do. Growth stocks. Fed time. Best stocks now to make bank. Fed is finished? What? 3 days ago? I wonder what was in this video. It might be like some old outdated information. It's interesting to see what he said. Best growth stocks. Does he talk about penny stocks? I guess he's been called out so much. He says growth stocks instead. He hasn't talked about penny stocks in a long time. Tesla stocks, growth stocks. 3 to 4x stocks. Crypto, so he's still doing crypto. Alright, so he hasn't talked about penny stocks in a while, actually. So what I'm going to do is, let's see what his growth stocks are. Best growth stocks to buy now, screaming Warren Buffett.
We're talking the best stocks to buy now, and yeah, this is the gift of knowledge.
Technical analysis course. Oh, I feel bad for anybody who buys that. Oh, back to the chart here, the candlestick chart.
Buy up already, and it's already there. I'm in triple leverage, so as a spy, you can see we crossed over here, and you should have been buying using my
just stock mode things. I'm in triple leverage, by the way.
379, and we are now at 461.99. In other words, we made bank using the bread recipe, which I teach at the course, and I've been trading on that. So good things happening right here, and it's continuing up. The RSI is a little high, but we still are green. I would not be surprised to see a few consolidation days before another leg up. All right. So Amazon now at one.
Amazon. What happened to this channel? It's so weird and boring now. Didn't Meet Kevin delete all of his videos talking about his stock picks that went down 90%? Well, he privated all of his videos, and then he selectively re-released a few of them. And if I had to guess, I looked at his Social Blade, it probably killed his channel. We'll do an audit of his channel after this. So yeah, this has been documented. I think I posted a video. He absolutely got annihilated on his picks. There's more than I could even think about, like Coinbase, among others. He's I actually don't like talking about him now. Like, I can tell he's getting a little wacky. Like, the stress or something's getting to him. He has that like Hollywood insane mental state going on right now, and so I actually even kind of feel bad talking about him. He's still like an awful YouTuber. His investment content is awful, but you can tell he's getting a little bit wacky. So I don't want to tap on that nuclear button too much. But yeah, he did private all of his videos and then selectively released a few of them. The thing is, his library of content was so enormous, nobody was going to dig back through that trash anyway. Unless like it was going to be like a CoffeeZilla or somebody with way too much time. Hang on, we'll go back to wait here. I said wait. Stream starting soon, live starting soon. Okay, that's interesting. All right, Social Blade. Let's see how badly Meet Kevin killed his channel. Oh, he's in trouble. He's in trouble. Wow. He deleted $554 million in views. He is anemic growth in subscribers. He's barely growing subscribers. Let's see the full monthly statistics here. Wow. 500 million views gone. Unbelievable. Yeah, the problem is Social Blade, you have to pay now for the monthly view chart. So let's see what we got here. Wow, only 200k video views a day. Ignoring these spikes where he re-releases videos. He's got to be in trouble. All right, so he got 70. Wow. So he got 79 million views the last 30 days. That's a decrease in views of 112%. So that's really bad. I'd like to see what it was before, but it's not showing me the chart. And some of these make me really nervous. He's only clocking in 113,000 views a day. Even at like a solid investing content CPM, like max, especially at this time of year and in this economy, he's pulling in max $8. That's $900 a day. There's no way he can afford all the stuff he's running. Now, obviously, he's got course sales and everything else like that. There's no way he's affording jet payments on that. No wonder he's going so wacky and crazy. Now, like I said, he's got a lot of other things going on. 133,000 views a day, 113,000 views a day. I get more than that on my channels. That's really bad. Let's see. Let's go to. Let's see his views here per video. 1.8 million subscribers, which doesn't mean anything, but yeah, 25k, 50k, 26k, 40k. This is danger zone territory. Like, if I really tried, I could get 36k views on this channel. Like, if I sold out and I talked about, like, Michael Burry, dividend, whatever, I could do 36k. He's got to be in trouble. 555 videos, though. A lot of them have come back. Anyway, back to Stockmo. Where did he go? Screaming Warren Buffett. He's just nobody's gonna hate on Stockmo if he makes his channel this boring. I'll have to find a new guy to make fun of.
For a repeat, but if it does reverse, it would be a massive red candle. But at this particular moment in time, I do believe that Amazon could be one of the best stocks to buy now. And so that's where we go with that one. Can you take a look at CPRT? Consider it done, my friend. CPRT. Is it one of the best stocks to buy now? Or is it going to be one of the best stocks to short now? Now, all right.
So the only two options in this investing land is this stock to buy now or to short now? How about just don't buy? You can both lose buying a stock and shorting a stock on the same stock. It's possible.
Take a look at this. What do we got here? Copart. All right, so Copart, we see a crossing back here. November.
Interesting, Copart. So he hasn't looked at any of the financials or what the company even does. He's evaluating entirely based on the random noise of this candlestick chart. Candlestick chart. There we go.
November 2nd.
I'm still reeling from his rocket emoji best stocks 2023 best stocks. Top investments best stocks 2023 rocket emoji.
We got confirmation on November 3rd. You would have been buying in around roughly 45.72. It is now up to 49.01. Nice little gain there, but it did come off of that gain. We were all the way up there at one point to 51.49.
Wow, the stock was down before, it went up, and if you buy at the bottom and go to the top, then you go down, you can both make money and lose money. What is this content?
Now it bounced off the 50 EMA. And unfortunately for you, it did confirm on this candle, 47.76, that it was a reversal. But is this a slap in the face for the bears? So the bears would confirm on this candle right here. And of course, next one did bounce off the 50. And I talk about this in the course.
Okay, but also bounced here. Do you see that? Like, so pretend you don't see everything to the right of this. Technically, it bounced here. Does that mean to buy? It goes down lower from that. It's just all noise. Like, literally all this investment analysis is find the bottom, find the top, and say if you buy there perfectly, everything's great.
Of course, watch the 50. You don't just go blindly in, especially when it's going to hit the 50. The 50 can act as a major support.
Yeah, he's killed his channel. This is so boring.
High here.
It's like not even worth making fun of on my live stream. Unbelievable. Unbelievable. All right, guys, one more stock ticker, and then I am out. As always, don't forget Superchat and CreatorHeadStart.com.
I need that money. I really, really do. I need that money. I really need that money.
Can't get the last bit of this.
Really need that money. Really, that money.
Last stock ticker, StockAnalysis.com. We'll take a quick look at the financials, not the candlestick chart, the financials. All right, seeing none. Thanks for coming out to the stream, everybody. I already plugged in everything I wanted to. See you on Telegram. And also next time, more investing news and more garbage stocks live. See you later. See you later, alligator. We'll play some music on the way out.